But what you are seeing is that the rest of the world is looking at gold as an option to hold rather, in my mind, than the U.S. Treasury. The U.S. Treasury, which has been weaponized, can be taken and in fact, using those proceeds potentially to give to a country you're in the midst of a war against, the way that we have done against Russia. We faulted on $5 billion worth of their U.S. Treasuries that we were holding, and we gave the proceeds to the Ukraine. $50 billion worth of European treasuries, the EU took all of the interest and gave that in the form of a loan to the Ukraine, amounts to several billion dollars. The West, I believe, has crossed a line that's very difficult to come back from. Again, the erosion of trust. And so not only that, you look at last year, it was the worst year ever for the 10-year treasury, or the second worst year ever for the 10-year treasury. In fact, where gold had less volatility for the first time in 45 years than the U.S. Treasury did. And this is why Judy Shelton's idea, the whole idea of her book, is to come back to a 50-year treasury that is redeemable in gold at the end of a 50-year period, to inspire confidence. But to her point, and to my question to her, is that in order for this to work, don't we have to show how much gold we truly have? And her answer was yes. And when we look at the rest of the world is not being honest. China, for example, is not being honest about how much gold they have. They've been producing between 300 and 500 metric tons a year as the largest producer in the world, using our trade imbalance to mine gold that it was even uneconomical. They see the big picture. They look out into the future. They don't care what it costs to pull it out of the ground at. Those numbers alone would be far more than we have. For years, Kai, I've been doing this for 35 years this February. And forever, people would say to me back in the 90s, and I'm talking mentors of mine, Jim Sinclair, Richard Russell, people that I would have the good fortune of talking to, and they would say, look, the 1,200 metric tons that never seemed to change way back then, that the Chinese would never update. Well, that's not right. They have way more than they're telling us. It's a strategic decision. And now they're at 2,300 metric tons. So in all of the, or 24, whatever it is, all those years, they've only added 800 metric tons. That's silly. It's not even close. And they're the largest producer in the world. They're the largest importer in the world. They're the second largest producer of silver in the world. They are a net importer, used to be a net exporter. They're buying doré, they're buying concentrate. The countries that they are striking deals with on the Belt Road are all massively resource rich and underdeveloped. But when these countries buy, for example, through a sovereign wealth fund, that's not reported to the IMF. The doré and the concentrate is not 995 pure or 999 pure. That's not reported to the IMF. When the People's Liberation Army buys, and they probably have as much or more than the PBOC, that's not reported to the IMF. And so, why would they be forthright and open about the amount of gold that they have when we aren't? And not only that, when you look at the fact that the BIS reclassified gold as the world's only other tier one reserve asset, and you see all of the central banks accumulated, including those in Europe, and when they saw what happened to the Bundesbank, give us back our gold, well, it only takes 5, 6, 7 years to get it back. I think the lack of trust in our traditional instruments like treasury instruments, and the possibility of going back to a system, as Zoltan Pozsar says, Bretton Woods 3, a system that will be about transparency, a la blockchain and commodities, a la gold. Just like Elmer Rousseff told us, the unit would be gold backed, 40% traded on Enbridge, and would be deliverable upon demand. Well, it just makes sense that the central banks understand this. Look, you could talk about the rise of cryptocurrencies and Bitcoin, and that could be a strategic asset. Sure, but it ain't going to back a currency system. It has too much volatility. Gold, on the other hand, would be the perfect backing. Even Kristalina Georgieva, the head of the IMF, said a central bank digital currency not pegged to something is fiat. Well, what else are they going to peg it to but what the BIS said is the only other tier one asset? And you go back to the beginning of 23, the report that came out of the IMF saying gold as an international reserve currency, a barbarous relic, no more, question mark. You put all of the things together.
The world is shifting, and so are the pillars that once upheld the global financial system. U.S. Treasuries, long considered the safest investment globally, are now under scrutiny. This isn't just speculation. It's a reaction to a series of unprecedented moves by the US and its allies that have undermined trust. Let's unpack this. In the past few years, we've seen the weaponization of US Treasuries. Consider this: $5 billion worth of Russian-held US Treasuries was confiscated and redirected to Ukraine. Similarly, $50 billion in European treasuries saw their interest payments funneled to the same cause. While these decisions may have served geopolitical goals, they sent a chilling message to nations worldwide. Your reserves are no longer untouchable. This erosion of trust is pushing nations to reconsider their reliance on the US dollar and US treasuries as reserve assets. And it's not just about geopolitics. Let's talk numbers. Last year marked the worst performance for the 10-year US Treasury in recorded history. For the first time in 45 years, gold exhibited less volatility than US Treasuries. Think about that for a moment. An asset class long regarded as a risk-free investment now carries more instability than gold, an asset once dismissed as a relic. This shift isn't lost on investors or nations. Judy Shelton's proposal of a 50-year treasury redeemable in gold is a fascinating concept. It aims to inspire confidence by tying paper to something tangible. However, for such a system to work, transparency is paramount. The U.S. would need to disclose its true gold reserves, a move that could either bolster trust or unravel long-held secrets. China is playing a different game entirely. Officially, their gold reserves stand at around 2,400 metric tons. But those numbers don't add up. For years, China has been the world's largest gold producer, mining between 300 to 500 metric tons annually. They're also the largest importer of gold, yet their reported reserves have barely increased. Why? The answer lies in strategy. China understands the long game. They've used trade imbalances to acquire gold, even mining at a loss when necessary. Beyond official reserves, there's speculation about massive unreported holdings. Alastair MacLeod estimates that China might hold up to 38,000 metric tons of gold, 20,000 by the state and 18,000 by private citizens. This isn't just hoarding, it's preparation for a future where gold plays a central role in global finance. China's secrecy is strategic. If they were to reveal their true holdings, it could destabilize the current financial system before they're ready to present an alternative. By keeping their cards close, they continue to accumulate gold at suppressed prices, exploiting the West's obsession with maintaining low gold prices to prop up fiat currencies. What's the end game? A return to a gold-backed monetary system seems increasingly plausible. The Bank for International Settlements, BIS, reclassified gold as a Tier 1 asset, putting it on par with cash and U.S. treasuries. Central banks worldwide, including those in Europe, have been steadily accumulating gold. This isn't random, it's preparation. The idea of Bretton Woods III, a system built on transparency in commodities like gold, gains traction daily. Even the International Monetary Fund, IMF, has hinted at this shift. A 2023 report questioned whether gold is still a barbarous relic or a viable international reserve currency. The answer seems clear. Gold is making a comeback. Europe isn't sitting idle. European central banks have been aligning their gold reserves to GDP ratios, ensuring uniformity across the Eurozone. This isn't just bookkeeping, it's preparation for a potential gold revaluation. By maintaining consistent reserves, they position themselves to weather the transition to a gold-backed system. The European example highlights a broader trend. Nations are quietly preparing for a financial reset. This isn't a conspiracy, it's pragmatism. The current fiat system, built on trust and promises, is showing cracks. Gold, with its 5,000-year history as a store of value, is the logical alternative.
Even look at the European central banks in your neck of the woods. All of them have been accumulating gold, and look at the way that the gold relation to their GDP is level across the entire European Union. It's as if they're all preparing for some form of a gold revaluation, some form of a new system tied to gold. So countries, it would be in their best interest to not say, this is how much we have. And I find it, there's a fine line between conspiracy and reality, Kai. And you look at this new supposed but unverified, massive, biggest gold discovery ever found in China. Well, what better way for them in a year or two, when this were to happen, to say, yes, we've told you this is all we have, but this gold find, we were able to extract so much gold that, and you mentioned Alastair MacLeod. 2 years ago, Alastair said the Chinese had 38,000 metric tons in his estimation, 20 by the state and 18 by the people. What better way to say, actually, we have 45,000 metric tons, not the 26 that we told you, because this gold find, well, God, it was huge. Well, how would we know? How would anyone know? My point to you is simply this. Do not trust what they're saying as it relates to gold, because we're playing the same game. No one knows how much gold we have, if we even have it any longer. And if indeed we are moving to a system that is tied to the stability of gold, as Judy Shelton says, is the only way to reestablish trust. Now, hers is not quite the gold standard as it once was, the classic gold standard, but tying a 50-year treasury to gold, which would be the first pathway to reestablishing trust with the United States monetary policy. Same thing is true with global monetary policy. And if that's where they think it's all going, it doesn't do them any good, not only to tell everyone how much gold they have, but to keep their mouth shut in terms of how much through proxy banks and sovereign wealth funds that they are draining from the COMEX and from the LBMA, using the stupidity of the Western banks that continue to suppress the price. And look at the drawdown in supply. We're just playing right into the hands of these countries. So it doesn't good to say how much they're accumulating or how much they have if the ultimate goal is to reintroduce this asset into the backing of a new monetary system. And I think ultimately that is where it will go to some degree. And maybe what the BIS did put a little bit of a damper. But remember, this is Chinese technology. They're going to continue to move forward with this, and they're going to settle in local currencies, and they are going to offset any difference on a net basis with gold until they get a new system. I think the whole thing is moving in that direction. And anyone that would hold treasuries that aren't gold backed of any duration right now in a country that has signaled inflation over austerity forever is foolish, especially when it can be weaponized. And that is what led to this whole group of the BRICS and the whole idea of using a gold backed currency instead of a dollar, which is losing value precipitously every day and can be weaponized against you if we don't agree with what you're doing.
The tectonic shift in the financial landscape is not just happening, it's accelerating. Gold is emerging as the cornerstone of a new financial architecture, one that prioritizes stability and trust over speculative promises. For those watching closely, the signs are unmistakable. Central banks, nations, and even private investors are aligning their strategies to accommodate the inevitability of a gold-centered system. Let's delve deeper into the forces driving this transformation and what it means for all of us. Central banks are the canaries in the coal mine of global finance. Their actions often signal what's to come, and their appetite for gold has been nothing short of insatiable. In 2023 alone, central banks purchased record amounts of gold, with China, Turkey, and India leading the pack. This is no coincidence. These nations understand that the US dollar, long considered the bedrock of international finance, is losing its luster. But why are central banks so keen on gold? The answer lies in its unparalleled qualities. Unlike fiat currencies, gold is immune to inflation and devaluation. It doesn't rely on the trustworthiness of a government or central authority. And in a world where geopolitical tensions can freeze or confiscate assets, gold offers a haven that is both portable and universally recognized. For decades, the US dollar has been the world's primary reserve currency, backed by the might of the American economy. However, the weaponization of financial systems, freezing assets, imposing sanctions, and redirecting funds, has made even the most ardent dollar supporters reconsider their options. Gold, with its 5,000-year history as a store of value, has become the alternative of choice. One of the most fascinating developments in the gold market is its intersection with blockchain technology. Imagine a digital currency that is fully backed by gold, traded on a transparent and immutable ledger. This isn't a pipe dream, it's already happening. Platforms like China's Bridge are pioneering the use of blockchain to facilitate gold-backed settlements. Why is this significant? Because it combines the best of both worlds, the stability of gold and the efficiency of digital transactions. Blockchain solves one of the main criticisms of gold, its lack of liquidity, by making it as easy to transfer as any digital currency. This technological leap could redefine global finance, making gold not just a store of value, but also a medium of exchange. While much of the attention is focused on Asia, Europe is quietly making its own moves. European central banks have been aligning their gold reserves with their GDPs, creating a consistent ratio across the Eurozone. This is not an exercise in accounting, it's a strategic maneuver. By maintaining uniform gold reserves, European nations position themselves to benefit from any future revaluation of gold. Should a global financial reset occur, these reserves would act as a stabilizing force, preserving the economic integrity of the Eurozone. This coordinated effort underscores the importance of gold in the emerging financial landscape. While the East and Europe are fortifying their positions, the West, particularly the United States, seems oblivious. The U.S. continues to suppress gold prices to maintain the illusion of dollar strength. This strategy is not only unsustainable, but also counterproductive. By keeping gold prices artificially low, the West is effectively subsidizing the accumulation efforts of other nations. The irony is staggering. The very policies designed to uphold the dollar's dominance are accelerating its decline. Every ounce of gold sold at suppressed prices is another step closer to a world where the dollar is no longer king. The current financial system is a house of cards, and it's only a matter of time before it collapses. Whether triggered by a debt crisis, a geopolitical event, or the natural end of a long economic cycle, the result will be the same: a shift to a new system. And in that new system, gold will play a central role. For investors, this is both a warning and an opportunity. Holding assets tied to the current system, such as U.S. Treasuries, becomes increasingly risky. Conversely, accumulating gold provides a hedge against the inevitable. It's not just about preserving wealth, it's about positioning yourself to thrive in a post-fiat world. While gold is the headline act, silver should not be overlooked. Often referred to as poor man's gold, silver offers many of the same benefits as gold, but at a fraction of the price. Moreover, its industrial applications, ranging from solar panels to electronics, ensure strong demand even in turbulent times. Consider this: the silver market is much smaller than gold, which means it's more volatile. When gold prices rise, silver often outpaces it. For investors, this volatility represents both a risk and an opportunity. In a bull market, silver's gains can far exceed gold's, making it an attractive option for those willing to tolerate short-term fluctuations. Geopolitics plays a significant role in the gold narrative. Nations like China and Russia are not just accumulating gold for economic reasons, they're doing it for strategic ones. By building their gold reserves, they insulate themselves from Western financial pressures. This is particularly important in a world where sanctions and asset freezes have become routine tools of diplomacy. The rise of the BRICS nations further underscores this point. These countries are actively exploring alternatives to the US-led financial system, including a potential gold-backed currency. While such a development is still in its early stages, the mere possibility is enough to send ripples through global markets. For individual investors, the question is simple: what side of history do you want to be on? Do you want to cling to a fiat system that is losing credibility by the day? Or do you want to align yourself with an asset that has stood the test of time? Gold isn't just an investment, it's a form of financial insurance. It protects against inflation, currency devaluation, and geopolitical instability. And unlike stocks or bonds, it has no counterparty risk. When you hold gold, you hold a tangible asset that is yours and yours alone. As we look to the future, it's clear that the financial system is at a crossroads. The choices made in the coming years will shape the global economy for decades to come. Whether it's a return to a gold-backed system, the rise of blockchain-based currencies, or some combination of the two, one thing is certain: the era of fiat dominance is ending. For those paying attention, this is an opportunity. By understanding the trends and positioning yourself accordingly, you can not only protect your wealth, but also grow it. The key is to act before the masses wake up to the reality of what's happening. The world is changing, and gold is at the center of that change. Whether you're a nation looking to safeguard your economy or an individual investor seeking stability, the message is clear: trust in gold, not in promises. So as we move forward into this new era, remember the lessons of history. Gold has always been the ultimate store of value. And as the world rediscovers this truth, those who act now will be the ones who thrive in the years to come. For investors, the writing is on the wall. The question is, will you read it and act, or will you wait until it's too late? The choice is yours.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.